Welcome everyone to episode number 11 of the Intersection 4 podcast. We have two of your three usual hosts here. We have Hamiz, the investor. We have me, the product and philosopher guy. And unfortunately, some last minute things came up and Brendan couldn't join us. But we also have a guest that was scheduled to come up today. And he's here with us today. His name is Elliot Roth. He is head of business development in agriculture at Deep Science Ventures. He's also a really good friend of both Hamiz and I. We go back with some of the startups that we've done in the past. And Elliot was also the founder of Spira. And Elliot, let's start there. So this episode is going to be mainly revolving around your experience with biotechnology and deep science and the deep science field. And I think a really good place to start would be with your journey with Spira, right? So I heard that Spira is in the process of shutting down. So I think it would be really interesting to start there. So what was Spira? When did it start? And why is it shutting down now? And how was that entire process? Walk us through that and we'll ask a few more questions from there.
Okay, so I started Spira when I was 22, about 7-8 years ago, 23. And so I spent the past 7 years building this biomanufacturing company. We were using algae to produce replacements for petrochemicals. And I scaled it up to about 16 people full time. And then we were operating in 14 different countries and then worked with about 83 farms. And what we did was we genetically engineered algae, gave that to farmers. Farmers would produce a certain type of algae. We would then refine and extract valuable materials and compounds out of that, then sell that on to food, cosmetic, and textile companies. And so we were working on scaling and whatnot. And some of the things that have happened this past year that just completely tanked the company, mainly what it comes down to is not working with the right people, to be honest, and being hugely resource constrained during the entire time of operating the company. And so it all kind of kicked off this past year, right around August 2023, when my co-founder hadn't been taking care of himself altogether too much. The weight of starting a company and kind of the consistent challenges and problems that it brings up just was causing both of us to have a lot of depression. And so there were these raccoons that moved into the attic of this community house that we had started, and then that caused every single person to leave the house. I had 2 employees that were there. They moved in with me. And then what happened is I hit the road with my now ex-girlfriend. That led to some problems and challenges in the relationship. She ended up cheating on me. We broke up. At the same time, my aunt was sick with cancer and ended up dying. My motorcycle broke down. It was really just like this horrific cataclysmic series of events where right around January, I found out that my chief scientist was stealing money from the company and not really telling anybody about it. And so at that point, I was like, oh God, this is rough. I need to make some sort of change. I was down on a beach in Baja trying to save my broken relationship when I met a guy who said, hey, I live in San Francisco. I was considering moving to San Francisco, so I picked up everything in LA, moved to San Francisco. I moved into a house with 13 people, 2 cats and a dog in the Mission. It's this big Victorian mansion, and got a room there and sort of leveraged myself all the way to put everything on credit cards, took myself off payroll, and tried to make it work and tried to basically restart the company. We went from 16 people in August of 2023 down to 4, and then started whittling down even more. And so got to be me and just one other person, one scientist on the team. And then we were trying to build back the company, and I was spending all my time in San Francisco talking to investors. And right now, the startup funding ecosystem is pretty bad with rising interest rates, as well as just kind of the promise of biotechnology hasn't been fulfilled. A lot of people overpromised and underdelivered. Okay. And so, presenting and pitching wasn't going well. Climate as a sector for carbon capture and other things like that has some capital. AI has some capital, but I didn't want to.
Let me just. I wanna hold on a few points here. I think this is interesting, and this was a pretty intense personal story. But if you were to put your finger down on one thing that made the company not work, would you say it was just like the people that you were around and kind of like a lot of the personal troubles that went through?
Yeah, so I think team is really everything, and we didn't ever really have enough resources to get the right team on board. So I was making do with whatever I could get. And in particular, one of the lessons learned is that I don't want to start something without having the resources to follow through effectively. Yeah, it always felt like I was scrounging around to try to get something to work and doing things not to the best of our ability because of that. And so
I think this is an interesting point. So it's lack of resources and then kind of like the people. And I want to explore both avenues separately because I think Hamiz may have some interesting insights here. So let's start with the people. So let's say Hamiz, you invest in a company, and I know you guys when there's more of a venture investment is a little bit later stage and things are more underway. But from an investor perspective, when you invest in a company that is having either inter-founder problems or either having founders having personal problems, what in your opinion should be the position of the investor? Should there be like a step in? Should you like come in to support? Should you just like step back and let things take their course? What's your take here?
Yeah, so we're very operational investors, so our answer will be different than most other investors. If your portfolio is 100+ companies, you don't really get to do what we do. You're not able to spend time on problems like this because there's too many companies. And honestly, like the most common thing that happens is the founder and the team having this type of issue. So this is like one of the most common issues that we see. And across the portfolio, if I think about like the companies we've been with and we've built with, like every single one has had senior management issues like this. So this is like not uncommon, totally, really kind of as an understood part of the journey. And so in our case specifically, we start off probably being kind of a mediator and trying to find that solution. Because to us, we're quite independent in one way, and we're quite dependent in another way. Independent in the sense that we put the best thing for the company first. Like we have no personal like chickens in the fight, right? Dependent in a way that we have to make it work with these people because they are the people that we have put our confidence in. So we can be quite effective at mediating because we can be a interested but uninterested party. Like we can be a third party looking at the facts of the problem. So we start off by mediating the problem, and for most teams, it actually gets resolved in that. And the investors can be very good mediators because they have intricate knowledge of the business, like they have the best interest of the business in mind, and they're really good at that. But if it goes beyond that point where there's obviously if there's issues about misappropriation of funds or fraud or something like that, then our job isn't just to be a mediator. Like our job is to also be the enforcer of the ethical standards of the expectations that we have. And so then we go in with a little bit of a tougher stance and try to solve the problem. If it is that multiple people on the team are involved in something like that, there's obviously a need for change in the management. But if there's one person, the way that Elliot's describing it, and we don't find in the investigation that there's overall issue, then we try to solve that one person's problem and then continue the firm. But the most important thing in this entire sort of picture of how we get involved is that the company comes above every individual, including us. And most founders don't separate themselves from the company in that manner. And if you truly are an exceptional founder who cares about the problem that you're working on and who wants to be responsible with the capital and resources that they've been entrusted with, then you would actually separate yourself from the business if that's what's best for the business.
Do you think in all of the experience of what you've seen of startups that work and don't, and Elliot, actually, you also have a really interesting take on this now that you're doing more of the venture side of the house. But in the experience of the startups that you guys see that work compared to those that don't, particularly on this topic of founder conflicts. What do you think is a key trait shared by those startups that actually do work from a team building perspective? Is it just that the founders happen to be friends? Is it like the perspective that they look at the problem that they're trying to solve, like what you were saying, Hamiz, that they remove themselves? Is it something else? I want to hear your thoughts on this. Why do some teams work out so well, some others just like it's chaos?
It's chaos either way. Like this type of transition is not simple or easy. Like I said, like I actually can't think of a company that we've been involved with that didn't have one of these issues and one of these discussions at least, right? But the places where we have seen the most success, I would say, goes back to the same principle, which is the company is above everybody. The goals, the mission of the company is above everyone else, including me. And so people who understand that dynamic and can separate the company from themselves, like make the right decision without the need of a lot of unnecessary and expensive, back and forth. So we recently had a situation like this, not directly in our portfolio, but one of our co-investors was dealing with it. And it legitimately took a 10-minute conversation with a CEO that had been building the business for like 5 or 6 years for him to say, you know what, I care more about the business than I care about my position. You don't even have to vote. I'll resign myself. Like you don't have to like vote on this problem. But we've also seen like the other extreme, which is, hey, like this company is me and I am this company. And if I'm going to go, then I'm going to make sure this company goes with me. Right. And in those situations, like obviously, it's just expensive and unnecessary, right? So the way that particular CEO interacted and treated the rest of the company, I would actually back somebody like that again, right? I would actually be involved in somebody like that again because they were able to effectively separate themselves and see who the best person for the job is, regardless of whether they're part of it or not.
I love that. I love that. Elliot, I want to hear your thoughts on this too. Do you think, and maybe even from the perspective of a founder too, how do you, because all of us know that whenever you're going to start a company with the team that you're starting it, it's almost like you're getting married, right? It's like it's a wedding that you're choosing. How do you choose the right people, right? And how do you make sure that this principle that Hamiz is talking about is well laid out at the foundation of the company?
Well, one of the key constraints that happens in deep tech is that you're looking for people with technical skills, and the people with huge technical skills are very expensive. And so companies that are undercapitalized, especially if you're making do with subpar talent, what you're doing is you're kind of shooting yourself in the foot, or you're under the assumption that these people are going to grow into a particular role or learn exceptionally quickly. And sometimes that just isn't the case. And so I've had to change up my team many, many times over the course of the years of operation. And most of the time what ends up happening is, like Hamiz was saying, investors step in to help mediate some of those discussions, which is really helpful from like a third party perspective and more impartial and definitely holding the company above anything else. But I think in particular, the ideology behind many like B2B SaaS companies, the funding system and setup is practically very different for deep tech. What you want to do is you want to finance the company really effectively and make sure that you get the right people involved from the very beginning, from the very onset, as opposed to iterating the personnel along the way. Otherwise, it's kind of like a death note for the company.
Interesting. And you mentioned something at the beginning of this comment that was that capitalization is important, especially when you're dealing with deep science, right? Because you're dealing with like PhDs of the PhDs of the PhDs. And if you can't pay a PhD what a PhD deserves to be paid, it's really hard to expect that a PhD is going to perform at the PhD level, right? So that brings it to the other point here that now you're acting as an allocator, Elliot, or at least you're on the side of the allocator. So where do you see money flowing right now into deep science? What are some of those areas that are like exciting in the deep science space that you alluded to at the beginning? And let's drill a little bit deeper there.
Yeah. So I think on the whole, one of the key constraints in the funding ecosystem is that funding to biotech has fallen pretty immensely. Most companies are enacting layoffs in some kind of way, despite the fact that profits are up in general, and especially in public market biotech companies. there's been a contraction in general in tech. And so new venture creation is happening at a much slower rate. I think one of the key differentiations that happens on my end of things is I joined Deep Science Ventures, which is a venture builder and venture studio, which means that we're working with corporate innovation groups and philanthropies to start companies from the onset, which means that they're properly capitalized for at least 2 years from the get-go. And the founders never really have to worry about drawing salary, and we pick and select the top experts in the particular field that we're focused. And we invest in pharma, agriculture, computation, which is kind of like AI, and then climate. And so the two realms that are really growing, like I said before, are really climate and AI tend to have the most amount of capital right now. And a lot of the biotech and sort of like biopharmaceutical development has been pivoting to focus on tech bio is kind of the movement where it's putting AI computational resources into biotechnology, into drug discovery, into the intersection of climate and bio as well. And so that's been something interesting that I've been seeing.
This is interesting too, because you said that funding for biotech startups is drying up, and a lot of biotech startups are having to react and frame themselves as like an intersection of bio and AI or some other contraption along those lines. Where do you think is the fault, and why do you think that funding of biotech startups is drying up? I do, like, when I look at the promises of biotech and I compare them with the promises of different fields like AI, it just feels like biotech hasn't moved as fast. But if you look a little bit deeper into some of the amazing advancements that have happened in biotech over the last 20 years is actually insane. So a little bit ago, I've been reading through this book called The Coming Wave. I mentioned it in the last episode. And one of the things that the book talks about is the cost of the incredible collapse of costs of sequencing human genome, and how it went from the Human Genome Project in the early 2000s of being almost $2 billion to sequence the human genome, all the way down to being worth like, well, $800 today to sequence your genome. And it's crazy to think that I was born in an age that the human genome had not been sequenced yet, and 25 years later, I could just sequence my genome by mail, paying $800, and I have the results here in a drive. It's absolutely mind-blowing. But that hasn't translated necessarily into business or into more funding into biotech, at least not in the form of startups. Why? Like, what's a missing link there? Is it just like a matter of markets, or what is the issue?
No, there's a couple of barriers there. So one of them is the fact that the capital structures that are used to fund B2B SaaS companies and the speed at which B2B SaaS has been funded and returns can be made is not the same in terms of physical bits. Like when you're developing something in the real world, it takes longer. And so the capital allocation required is different, and the resulting returns are going to be different. But when you look at the leveraged change that happens in the world and what that, like the breakout successes there, it enacts massive amounts of change in the world in ways that software doesn't necessarily do in the same kind of way. And so that's one category, is that the return profiles of the 7 to 10 year return horizon for funding doesn't do the same kind of thing in biotech. I think the second is there's certain like regulatory capture and regulatory barriers that have been enacted, particularly in biotech pharmaceutical development, that slow things down quite a bit. So when you look at sequencing, Illumina in essence is a monopoly over sequencing technology. And when you look at the total cost of sequencing, it has plateaued. And it's plateaued particularly because Illumina controls the majority of the marketplace. And so stuff like that makes it so that it's really hard to kind of proceed beyond a certain point, particularly because pharmaceutical development has such high costs and has such high barriers. And it's really trapped in a lot of institutional areas, like particularly around Kendall Square or San Diego, and these different research institutions that kind of hold on to the IP really, really tightly. And so that leads me to the third kind of main constraint, which is opening up access to the tools of engineering biology. And that's been really faulty and really hard to do. When it takes a $3,000 piece of software to go about designing a genetic cassette, to go about inserting into an organism, something like that provides a huge barrier when you can pick up a tool like Node.js or Python or other things like that and just code something really, really quick. So those are the kind of things that I think we need to move past in order to get engineering biology into the
So 3 factors, and if I can just summarize here. So factor number one being returns, right? Like it's just not the narrative for investors hasn't been as appealing as the next exchange or the next big AI company or whatever. Second point being market structures. Yeah. And second point being just market structures right now. Like there's a lot of dominance from some companies. There's not a lot of competition, just market structures. And the third point is just barrier of entry is a lot greater. It's a lot harder for me to get a genetic engineering kit and start printing different strands of DNA than it is for me to pick up Node.js and create new websites or applications, right? So we could summarize those three things. Okay. Hamiz, point number one. What would it take for you to for a fund like yours, and or just for an investor like you? Let's just put it that way, to look at a biotech company and be like, yeah, I wanna put my money behind this, because I feel like most of the times, bio or deep science companies are far more longer term than your usual, say, AI company or your usual SaaS startup, right? If you're going to invest in a nuclear fusion company, you shouldn't expect to see any returns before, I don't know, 10 years, 20 years. The same thing for like a biomanufacturing company, right? Like what Elliot was doing with Spira of replacing petrochemicals with algae. What are some of those things that you would like to see to be able to put some assets behind a company like that?
Yeah, so we invest in frontier markets, and so we're always looking for new frontier markets, trying to see if there's an edge that we have in that business. And we've looked quite deeply into biotech, both on the public and the private side. And I'll tell you where the challenges come from. So we have not made any investments, and this is why. From all the long dated assets in the world, biotech is the longest dated one, right? Like it's like the stuff that I'm not going to say the longest dated one. Maybe fusion is like even more longer dated, but biotech is like long dated assets. And so what people don't realize, I think, about capital allocators is that our partners, the people that support our investments, they don't actually care, I don't think, what assets we invest in. Our job is quite simple. It's very basic. We have to compound capital, and we have to compound it at a rate faster than others can, and that's it. Now, if that means we do venture capital in AI, then great. If that means that we trade stocks, then that's great too. It doesn't matter, as long as you believe that you can compound capital at a faster rate than others. It doesn't matter like what you're investing in. So, the same way that when we pitched, other frontier markets, like at any point we can pitch biotech as another frontier market. We just have to be able to show how we can compound capital faster in biotech than the other frontier markets that we focus on. And so that's why biotech companies, because they're so long dated, and yes, they can compound capital, but because of the long dated nature of it, the compounding effect is much slower and much smaller. It might not fit in that ranking of the asset classes that can compound capital the fastest. And that's why you have like more strategic investors and like more non-financially driven investors like backing these efforts. It's because of those two things. I think one of the last things that made us quite hesitant to believe that we had an edge in understanding this market is because it takes such a specialized skill set to understand and underwrite these investments. Even after there were like doctors in our office, like explaining in as simple terms as possible what was going on, like, and we believe that we're pretty, decent at understanding new things, but it was just way over our head. Like we had no idea what they were talking about by the end of it all. And so I think because it is, because like AI, blockchain, like all these other concepts, so you can draw anecdotes and you can draw analogies to those things. It's much easier for people to understand, investors to underwrite those assets, right? Like it's still frontier markets. It's still like difficult to understand, but you don't need a computer science degree to understand blockchain. But I do believe that you need some medical background, some bio training to truly understand and underwrite what's going on, because so much of it is so experimental. And so much of it depends on your ability to understand what's possible and what's not possible, or what's important and what's not important.
Yeah, I
So,
would challenge the credentialism there a little
okay,
bit too,
okay,
because I think that one of the key constraints that I'm talking about is the accessibility of informal learning systems to understand what's going on in biology. I think one of the constraints that we have is that a lot of that's locked up in PhD programs. And so, a key tool to unlock is informal learning and the ability to gain access to that information. I think it's without a doubt doable. It's something that, like you said, it takes time and specialized knowledge, but you can gain that specialized knowledge. Just like people gain specialized knowledge in blockchain investing, you can also gain specialized knowledge in biology investing.
Mm-hmm. Yeah, and I'm sure, right? Like I'm sure. I just feel that it's more distant.
Technical.
More technical,
Intricate.
more distant. Like I'll give you another example. It's like similar to this. Within the realm of real estate, the real estate that most investors gravitate towards is the real estate that they interact with every day.
Right.
So most investors, like when they start off, they don't start off in commercial or industrial real estate. They start off with residential real estate. Real estate is just an asset class, but the part of the real estate that you interact with on a daily basis, like you're the most comfortable in underwriting that. And then like the usual like path that I see, at least on the real estate side, is they start with residential, then they go to multifamily because they know how to underwrite, some apartments, because we've all been in apartments. We all understand what makes a good apartment, right?
Well, the kind of key thing that I've found in biotechnology is that the older people get, the more likely they are to invest in biotech.
Very true. Very true.
Because they're really worried about dying, and they interact with the health system more and more.
Yeah,
So
and the problem is closer to them. Yeah, the problem is closer to them. Yeah.
And maybe that also corroborates Hamiz's point of like the closer you feel to the problem, the closer you want to see the more you want to see a solution.
The recognition is that I don't think many people realize is that we are close to the problem every single day. Like we are biology, and so the challenging bit is I think the killer apps that are currently in the ecosystem come very top down, very heavy on therapeutics and drug development, because at that point you're faced with the constraint of do something or die. And what ends up happening is that most pharmaceutical development is funded by banks at that point and very, very large investors. And they take IP from universities and then build executive teams from the ground up. So like Flagship Pioneering is the group that started Moderna, and they own 90% of the companies that they start and found. And so that's a different kind of venture studio model and venture building model. It's also something where by having that much equity, you can maintain funding over long periods of time too, because you have expected return of like much, much greater in terms of capital allocated for that. But the key thing, I think, is understanding that the way we can interact with biology is a lot more fluid and a lot faster, so long as we don't adhere to the same sort of bounds that we found ourselves in. Stuff like therapeutics have like a much higher barrier to entry than something like a material or a potential food product or fashion or other things like that, which is where a lot of newer biotechnology development has been happening, which is kind of cool.
So, okay,
I want to segue us into the last topic here, which I want to discuss, which is what you're excited about for the future, Elliot. But before we go there, I just want to make a quick comment. Hamiz, when you were talking about the long dated assets, a kind of funny idea that occurred to me is that maybe there's some one of the beautiful things about crypto is that you can always create synthetics of virtually anything that you can represent on chain. So you have a NFT, okay, wrap that NFT into a synthetic of that NFT, and then a staked NFT, and then you get a synthetic of the staking of the NFT that you wrapped, and you can use this as stake into deposit into a liquidity pool, and then the liquidity pool gives you a synthetic, and then you can sell it. It's a mess, right? You can create leverage all the way down. It will be interesting perhaps to look for crypto as ways of finding liquidity and a lot of these biotechnology projects much faster. Maybe there's a future. I don't know how distant this future is. I think it depends heavily on regulatory clarity. Maybe there's a future in which tokenization of securities is much easier. You could tokenize your shares of a given company, and then you have immediate liquidity, and that maybe opens the door for a much higher influx of assets into biotechnology through crypto investments, right? So
Sam,
that's one of the use cases of crypto.
Related to that, there was a big session on decentralized science startups, as an example. And many of them have accepted crypto investments ranging from Molecule DAO to Lab DAO to Vita DAO is the most public of them. And they received a big investment from Pfizer as well. Like, I mean, it was kind of a token investment of 500,000, but it is mediated by cryptocurrency and by blockchain development of different IP assets.
What I see like the use case, at least for me, is the main use case for crypto, well, not main anymore, but one of the main ones was fundraising, right? Like it was capital formation was the use case. But I think for me, it's more interesting because there actually are quite efficient and more regulatorily clear ways to fundraise than crypto. But I think crypto becomes more interesting is the data and the access controls, right? And so a lot of this research needs the data, needs specialized access, needs licenses and royalty streams, and like needs to set up that infrastructure. So like to me, like unlocking the value of that intellectual property and unlocking the value of the data can be done very effectively using a blockchain like economic system.
Kind of. I mean, our current regulation systems, you have to be like HIPAA compliant to access certain servers even, and AWS offers HIPAA compliant servers now. So there's like these really like intriguing constraints when it comes to data transfer. And I think that a lot of our regulatory systems were set up for a pre-internet world.
100%. Yeah, 100%. And I just want to extend this. I think so many of our regulatory constraints around technology in general, that whether that's data, whether that's like biochemical data, whether that is related to securities, so many of those are just so outdated, and our political system is so sluggish that it's really hard to update them again. It's really hard to create new policy at the federal level, and a lot of this regulation is just happening by enforcement, and it's just an absolute mess because nobody's actually respecting the Constitution in many ways. So it's just a mess all around. And I definitely think that's
some of what I'm seeing is that companies are going outside of normal regulatory environments to proceed with medical trials and development in other countries, and then bringing that information back to the United States. And it's a bit of a gray area to understand whether or not the FDA will accept that data if it doesn't have insight or oversight into the trial development themselves. And so
if they wouldn't.
Yeah, well, some old lab mates of mine, as an example, are conducting medical trials on people in Spira, which is a special economic zone in Roatan in Honduras. And they had, I don't know, like Brian Johnson come through, and they've had Sam Altman is an investor and Peter Thiel's an investor. So like these kind of things where startups are trying to get quicker about biotech development. The challenging thing is that when you move fast and break things, people die in biotech and healthcare, right? So that's the challenging bit.
Let's close
more than challenging. That's really serious.
Let's close here with some of the things for the future. So one of the predictions that I've made before in this podcast is that I'm seeing all around tech a lot of people who made a lot of money with several of the previous waves that have come, from the early internet to mobile to social media, crypto, AI. A lot of the people who made a lot of money really early, who are now getting older and are realizing, oh my gosh, I'm going to die soon. Let's invest in possibly finding a cure for death. And now pouring a lot of money into the field of longevity. And I am seeing that we're on the verge of a I wouldn't necessarily call it a speculation frenzy, but definitely a new wave on longevity technologies. And one of the things that I've said is that the same way that, say, 2017 and 2020 were the wave of crypto, and now we're in the wave of AI. I think the next wave by the late 2030, the late 2020s is going to be a wave of longevity. So that's one of the things that I'm excited about. I have particularly myself gone on a longevity craze. I sequenced my genome and I started taking several more like out there longevity supplements, changing my changing regimen and a bunch of other things. But Elliot, this one is for you, man. What are some of the things around, not necessarily just longevity, but what are some of the things around biotechnology and deep science that excite you for the future?
Yeah. I think the most recent, I don't like thinking about trends. So I think predominantly as a background in biotechnology, like we were talking about, you must have like a much longer time horizon than most people. And so I think if I capitalized on trends, I would have a cellular agriculture company, or before that, I would have a crypto mining startup, or before that, I would have, like I'm focused on the long-term time horizon. And I think that what is happening is that a lot of these tool development, a lot of these funding mechanisms get leveraged to speed up the process of development in biotechnology. And in particular, what I see happening is not only from like a longevity perspective, but from like a cognitive enhancing perspective, or from a like trial development perspective, or there's human genetic engineering that's already occurring. It's just happening really quietly. That's going to speed up. There's quite a bit of focus around leveraging organoids and organ systems, and like doing little tiny brain computers. That's really intriguing, because that's a kind of like lens of what ends up happening with the intersection of biology and computation and AI. If you have little mini brains doing things. I mean, we have this weird, wacky world of potential in biology where I think the deployment of things hasn't been as quick or as fast as in software, right? So I think for me, biomanufacturing is still one of the key unlocks, where we don't have systems that can manufacture at scale in biology. There's been big calls to transform that, because biology is one of the things where you can set it up virtually anywhere. And in a changing world order, what that means is localization of production. And so that's what I see happening in the future, is a whole lot more biomanufacturing, a whole lot more relation to cognitive systems, internal systems, other things like that. Yeah, there you go. Yeah.
One thing that I want to
share. Yeah, I read about this one in case listeners haven't heard, or you're not watching the video right now. In 2022, late 2022, some scientists in Australia, I believe, grew some brain cells on a dish, and taught those brain cells to play Pong. So they basically created a mini computer, as Elliot was mentioning. So yeah, definitely exciting. And one more thing that I would mention too, that I'm particularly excited about in that space, is the capacity to store data with DNA. I think is infinitely greater than the capacity to store data in the way that we're currently storing data on disks. I was doing some digging a couple of days ago, and I saw we made a tweet about this. We're trying to be more active on Twitter now as the Intersection 4 podcast. But yeah, there's some research that shows that you could basically store all of the world's data on a handful of kilograms of DNA. And I think that's an entire field that is like very unexplored. So yeah, it's just an exciting, the overlap between computation and biology are really interesting.
Mm-hmm.
Very interesting. Very interesting. So if you had to build, Elliot, like from scratch, a new business, what would you build it in? Doesn't have to be in biotechnology. What would you build it in, and how would you go about it, given the great experience that you've had?
Yeah, this year is the year of projects for me. So with this steady job, I get the ability to build companies in agriculture, which is really cool as a full-time job. So I think our companies have the ability of staving off famine and for hundreds of millions of people, and preventing death, which I think is really exciting. I'm on trajectory probably to build about 10 companies this year with Deep Science Ventures, which is exciting, and that's the day job. And then on the side, every single month, I'm going to be launching a new project. And so Some of the interesting things are oral hygiene project that does away with toothpaste and changes your microbiome, right? You don't have to brush your teeth anymore. Another project where it'll degrade landmines and you can use soil bacteria to break down landmines. Another project that has to do with medical trial development, or another one that does away with fertilizer. There's just all sorts of interesting potential avenues of biotechnology interfacing with the world. And I think that one of the key things that I look at is what are tools that I can release that other people can co-opt and use and edit and hack, and sharing that with as many people as possible. To Sam's point of DNA data storage, the Internet Archive here is very interested in storing biodiversity. So as species start going extinct due to climate change, how do we store that information? How do we make sure that the information just isn't lost altogether? How do we actively compress and work with DNA as a mathematical function? Those are the kind of intriguing ideas that I'm going to be playing with this coming year.
There's an existing project to bring back woolly mammoths by inserting mammoth DNA into some elephants in the Russian tundra or something like that.
Colossal in that company too. I think it's really fraudulent, but that's just me.
It could be. This is just me as a non-educated biological.
Cool idea. I just think the pitch itself is pretty fraudulent, and I think they can do it. I think you can take African elephants and then insert new genes into the progeny and then come up with woolly mammoths by all means. But I think that the challenging bit is when we turn these into companies. I'm really much more inclined to do like creative scientific work. And that creative scientific work can just be like fun projects. Like we have no fun coding projects in biology. Like you're expected to publish a paper or you're expected to start a company. Those are the two avenues. So like, where's the fun science happening? Like all of us watch Bill Nye as kids. Like where's that happening now?
That's good. That's good.
Okay. And then I actually think this is a last really interesting point that I want to make before we wrap up. A book that I read a while back is called Devil Take the Hindmost, a history of financial speculation. So basically it walks you through speculation in multiple different innovations since the 1700s. So all the way from diving bells to the great navigations to Dutch tulips, the first New York Stock Exchange speculation, and so on and so forth. And I really think that a wave of speculation is going to be coming in biotech, and in many ways because of exactly what you're saying, Elliot, that a lot of fun projects or fun coding projects equivalent in biotechnology kind of need to become a company, kind of by necessity, just to be able to find funding to be able to go through with the project, right? So it just doesn't make sense from a company perspective, but it can be such an outlandish idea, like, hey, bring woolly mammoths back from extinction. And okay, everybody's going to put money into it thinking it's a viable business, but it's at the end of the day just like the equivalent of a meme coin, if you may. The equivalent of a Dogecoin is like mammoth coin. Maybe that's $1 million idea just waiting to be created right there. But anyhow, guys, let's wrap up here. Thank you all so much for watching, and thank you, Elliot, for joining us. And yeah, we'll see you in 2 weeks for episode number 12.
Cool.